Welcome back to Investing Talk Podcast. Today we are digging into all the latest data, the analysis, the news, everything surrounding Bit Digital. And the big question we're trying to answer for you is, well, pretty straightforward. Is Bit Digital a good time to buy right now? We pulled together a whole load of sources, looked at their recent strategy shifts, the technical charts, what might be coming up next, just trying to give you the complete picture. Before we jump in though, could you please subscribe, like this episode, maybe leave a comment. Also really important, if there's a specific company you want us to look into, just let us know in the comments below.
Yeah, and answering that question about Bit Digital, it's fascinating because, you really have to grasp that this is almost a totally different company than it was, say, 6 months ago. They've gone through this really intense, deliberate transformation. They're moving away from just traditional Bitcoin mining, which can be super volatile, right, towards a dual strategy. They're focusing hard on becoming a pure-play Ethereum treasury and staking company. That's one side. And the other side is investing in this high-margin AI infrastructure. So we need to break down if this big pivot actually supports the bullish momentum we're seeing in the stock.
Okay, yeah, let's definitely unpack that pivot first. Because like you said, this seems to be where the story really changes from your typical crypto miner. For ages, people just saw them as another speculative mining play. But our sources are showing this dual exposure now, digital assets and these AI cloud services. It almost sounds like two different businesses bolted together. Is that right?
It does sound a bit like that, but actually that synergy is kind of the whole point behind the new valuation story. And the change, it happened fast, mostly over the last 3 months. Shows real corporate agility. The biggest move was really formally shifting to be Ethereum focused. And they're not just holding it passively. No, they're actively staking it. In fact, by early October 2025, their ETH holdings were worth around $506 million.
Wow, $500 million in Ethereum. So what does pure play ETH treasury and staking actually mean for their income? How's that different from mining Bitcoin?
Well, fundamentally, it shifts how they make money. Mining often means high, unpredictable energy costs, and your revenue depends completely on finding the next block, essentially. But holding and staking Ethereum, you've got this huge asset base, that $500 million we mentioned, that can appreciate, plus you're generating a fairly predictable yield from helping secure the Ethereum network. It's kind of like changing a lottery ticket into an interest-bearing account. It should, in theory, stabilize revenues quite a bit.
Okay, that makes sense. And at the same time, they spun up this AI computing business. Tell us about White Fiber.
Right, White Fiber. That's their big play into the AI infrastructure market. They actually completed the IPO for that subsidiary back in August 2025. And here's the key part. Bit Digital kept a massive stake, about 74.3% of White Fiber. At the time of the IPO, sources were valuing that stake alone at roughly $468.4 million.
Okay, hold on. So we're talking about two huge distinct assets here. $500 million in Ethereum generating yield, and a controlling stake, almost 3/4, in a separately listed AI company, also valued near $500 million.
Precisely. That's the structure. It positions them, you see, to benefit from growth in two really hot markets right now. You've got the yields from crypto staking and then the potential high growth from AI training and cloud services, often on long-term contracts. It looks like a very deliberate hybrid model, aiming for stability and some serious equity growth potential.
Okay, so the strategy is clear. Let's look under the hood at the financials supporting this. Our listeners appreciate the hard numbers. How's the company's financial health looking right now?
Well, the numbers definitely show a company in the middle of a big shift, but one that seems built on a pretty solid foundation, actually. If you look at the trailing 12 months, the TTM revenue, that's $98.4 million as of the end of June 2025. And importantly, the gross margin is really strong at 42.07%.
Yeah, 42% gross margin. That's pretty impressive, especially for a company changing gears so drastically.
It is. It suggests they had good operational efficiency even before these new, likely higher margin AI and staking operations really started contributing fully. Shows some pricing power, too.
But, okay, looking back, the TTM figures also show a net loss, right? Sources mentioned about $52.66 million, an EPS of negative $0.16. How do we square that loss with this bullish story?
Right, and that's where context is absolutely crucial. That net loss you mentioned, it's backward-looking. It reflects the old playbook, the Bitcoin mining era, with its lower margins and higher costs. What investors are focused on now is the future. And the analyst consensus, well, it's forecasting a really strong year-over-year jump in both revenue and earnings for the upcoming Q3 report. Those forecasts are pretty much entirely based on this switch to the higher margin AI and staking activities that have only just really come online fully. The market seems to be pricing in that future efficiency.
Got it. So the TTM loss is sort of the cost of pivoting, and the Q3 expectation is the market saying, okay, show us the results of the new direction.
Exactly. And that brings us to maybe the most important point. The thing that really sets them apart from a lot of others in this, let's face it, high-risk sector, it's their balance sheet strength. The company has zero debt.
Zero. Like none at all.
Zero. Debt-to-equity ratio is nil. They've got net cash, plenty of liquidity. Now think about that. For a company trying to scale up an AI infrastructure, which needs capital, that flexibility, being cash-rich, is a massive competitive edge. They don't have to go cap in hand for expensive funding rounds to build out white fiber.
Okay, zero debt plus hundreds of millions in valuable ETH and that AI equity stake.
Yeah.
That does paint a very strong defensive picture. All right, let's shift gears again. Talk about the technicals. The company's transformed, great story, but is the stock price actually reflecting that? Where has it been, and what are the charts telling us?
Yeah, the technical picture, looking at it as of mid-October, it definitely seems to confirm the positive story we've been discussing. The bullish trend looks very much intact. The stock's trading above all the key moving averages people watch. The 50-day, which is around $3.12, the 100-day at $2.99, and the 200-day at $2.78. When you see a stock consistently holding above those longer-term averages, it usually signals that buyers have been accumulating it steadily over months.
And what about momentum? Are the indicators like MACD showing the same thing, or is there a divergence?
No, they're confirming it too. The MACD, that's moving average convergence, divergence, and the ADX, which measures how strong the trend is, both look bullish. They're basically signaling that the momentum is still favoring more potential upside. And here's something interesting for the chart watchers. The RSI, the Relative Strength Index, it's pretty neutral, around 54.42.
Neutral RSI. So that means it's not considered overbought yet, despite the run-up.
Exactly. It suggests there's still, technically speaking, room for the stock to move higher before traders might start thinking it's gotten ahead of itself. No immediate technical red flags right now.
Okay, so there might still be buying power left. It's been trading in a fairly tight range recently, you said. Where's the key support level if it does pull back? And what are the analysts predicting price-wise?
Yeah, the recent action's been roughly between $3.45 and $3.67. Seems like solid support has built up between $3.10 and $3.30. That's the zone buyers have stepped in before. As for the outlook, well, the consensus analyst rating is a strong buy, and the average price target for 2025 is sitting around $6.33.
Wow, $6.33 from the mid-threes now.
Yeah.
That implies, what, over 70% upside? That seems incredibly optimistic. Are they maybe missing something?
It's definitely aggressive, you're right. They're clearly pricing in a lot of success from this pivot we've been talking about. Shorter-term technical models also seem quite bullish, suggesting maybe a range of $4.76 is possible in the next few months. But I think the analysts are likely betting heavily on that zero debt status being a huge advantage for white fiber. You know, in the AI world, big clients want partners who are stable, who aren't going to suddenly run out of cash. Zero debt screams stability. It says they're likely to be around for the long haul.
That makes sense. Stability counts for long-term contracts.
Okay, looking ahead then, say the next 3 months or so, what are the key events, the catalysts, that could actually move the stock towards those targets?
Well, the single biggest thing on the horizon is definitely the Q3 2025 earnings report. That should be out around December 13th. This will be the first real look, the first report showing significant revenue from these new high-margin staking and AI contracts. So investors are going to be laser focused on the guidance. What are they forecasting for Ethereum staking yield? What's the pipeline look like for white fiber contracts? If they deliver strong numbers and upbeat guidance, maybe beat the estimates, yeah, you could see a significant re-rating of the stock upwards.
Makes sense. Q3 is make or break for proving the pivot. What about other things? Market forces, institutional money? Oh, absolutely. Keep an eye on institutional flows. You've got the portfolio disclosures due around October 31st. That shows who's been buying or selling. And then in mid-November, you often get ETF and index rebalancing periods that can cause flows, sometimes volatility. Because the company's profile has changed so much, positioning itself as this ETH-centric play, funds might be forced to reevaluate whether it fits their mandates. Plus, you know, there's always market chatter, rumors about maybe a strategic partnership with a big name in the Ethereum space. That would add a lot of credibility. Or even talk about potential index inclusion reviews, maybe getting into something like the S&P Small Cap 600 index.
Index inclusion, that's always a big catalyst, isn't it? Why exactly does that matter so much for a stock price?
It's huge because it creates forced buying. If a company gets added to a major index like the S&P Small Cap 600, all the passive index funds and ETFs that track that index have to buy the stock. They don't have a choice. Their job is to replicate the index. So it guarantees the steady, non-discretionary flow of buying pressure, often pushing the price up over time.
Right, forced buying from the passive funds. Okay, lots of potential upside drivers there. But we have to talk about the risks, too. Sources always mention sector volatility, but what are the specific risks with this particular strategy, this dual pivot?
Yeah, that's the critical question, isn't it? Can they actually pull off this new complex model? Execution risk is definitely the big one here. I mean, sure, the diversification helps buffer against just pure crypto swings, but running a high-performance computing business like white fiber, that's tough. You need specialized tech talent. You need to manage massive data centers, keep them cool, secure big long-term contracts against giants like Amazon Web Services, Microsoft Azure. They've moved incredibly fast on this pivot. Now they have to prove they can deliver the quality, the uptime, the customer service needed to scale white fiber effectively. That's a very different ballgame than running crypto miners.
So execution on the AI side is the main question mark. Okay, let's try and synthesize all this for the listener. Given the zero debt, those bullish $6.33 targets, the big strategic shift to ETH and AI, but also acknowledging that execution risk. What's the overall investment thesis that emerges from the sources?
Well, the sources seem to converge pretty strongly on a bullish outlook, actually. The overall assessment leans towards a high chance of success, really driven by two main things. First, that financial stability. The zero debt balance sheet is just huge. It provides the foundation they need to confidently scale the AI business without constantly worrying about funding. It's a massive competitive edge. And second, it's that unique dual exposure. They get the benefit of essentially green-powered digital assets through the Ethereum staking yield, plus significant potential upside from their big stake in white fiber's AI growth. Combine that with the strong technical momentum we saw and those really important earnings coming up next quarter.
Yeah, the sentiment from the sources is overwhelmingly positive about future growth potential.
It really sounds like a company that's managed to transform itself, shedding that volatile old-school miner identity. Now it seems to be judged on a much higher quality, potentially higher margin asset base.
Right.
So the company has definitely aggressively repositioned itself. Ethereum pure play, AI, infrastructure provider. It's a new narrative. I guess the really interesting question you should be thinking about now is this. Is the market today fully valuing the sum of all these distinct parts? You know, the ETH treasury, that zero debt safety net, and that very significant separately listed stake in white fiber? Or is it maybe still treating the stock a bit like an old crypto miner, just assigning it a lower valuation multiple than perhaps the sum of its parts deserves? That gap, if it exists, that's where the real potential upside could be hiding. Okay, thank you for joining us for this analysis today. Keep learning, keep questioning, and we'll see you next time.
Absolutely. Informed analysis is always your greatest asset. Goodbye for now.